ExamPrep.School. Vermont Adjuster's Property and Casualty Insurance Exam. Exam code SERIES 14-33. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Adjusting losses, auto insurance, business owner's policy, commercial package policy, dwelling policy, homeowner's policy, insurance basics, insurance regulation. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Vermont insurance regulations, a resident insurance adjuster must meet which minimum age requirement? A. 21 years old. B. 19 years old. C. 16 years old. D. 18 years old. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is D. The correct answer is 18 years old, because Vermont statutes require insurance adjuster applicants to be at least 18 years of age. Reason A is not correct. This age exceeds the statutory minimum. The requirement is lower. Reason B is not correct. This age is 1 year above the actual minimum requirement of 18. Reason C is not correct. This age falls below the legal threshold, which is higher. Question 2. Which of the following accurately describes the standard component of the NAIC uniform application form used in Vermont for insurance adjuster licensing? A. It grants exemption from pre-licensing education for experienced claim professionals. B. It includes standardized disclosure questions about criminal, financial, and professional background. C. It must be submitted within 14 days after passing the licensing examination. D. It requires a sponsor signature from a licensed insurance company representative. The correct answer is B. The uniform application contains standardized background disclosure questions covering an applicant's criminal, financial, and professional history as required by the NAIC. Reason A is not correct. The application itself does not provide education exemptions based on professional experience. Reason C is not correct. There's no specified 2-week window for form submission following the exam. Reason D is not correct. The form does not mandate a sponsor or company representative signature. Question 3. After submitting her Vermont adjuster license application, Kim learned that she must complete the resident background check fingerprinting process. Which method best satisfies the Vermont Department of Financial Regulations fingerprinting requirement? A. Provide ink fingerprints on an FD 258 card executed by any notary public. B. Acquire inked FD 258 cards from a local police department and mail them directly. C. Submit digital fingerprints via the department's approved live scan vendor. D. Send ink impressions on a generic fingerprint card completed by a private technician. The correct answer is C. The Vermont Department requires applicants to submit fingerprints electronically through its approved live scan vendor to ensure accurate processing of the National Criminal History Record Check. Reason A is not correct. Fingerprints inked by a notary public do not meet the requirement for submission through the approved vendor. Reason B is not correct. Mailing cards from a local police department bypasses the department's designated live scan process. Reason D is not correct. Generic fingerprint cards completed by a private technician are not accepted without using the approved live scan system. Question 4. Under 8. VSA Section 4804, which of the following is a valid ground for suspension of an insurance license in Vermont? A. Conviction of a felony involving dishonesty or breach of trust. B. Failure to notify the commissioner of a change in business address within 30 days of relocation. C. Soliciting insurance business before completing required pre-licensing education. D. Paying a valid claim before verifying that the policy provided coverage. The correct answer is A. The correct answer is conviction of a felony involving dishonesty or breach of trust, because 8 VSA Section 4804 explicitly lists felony convictions for crimes of moral turpitude as grounds for suspension. Reason B is not correct. Failure to notify a change of business address is a record-keeping requirement, but not listed among the grounds under Section 4804. Reason C is not correct. Solicitation before completing pre-licensing education prevents licensing, but is not a suspension ground once licensed. Reason D is not correct. Paying a claim without coverage verification may violate business practices rules, but is not identified in Section 4804 as a suspension ground. Question 5. Under Vermont insurance law, an agent holds premium funds as fiduciary property. Within what maximum number of days after receipt must the agent remit premiums to the insurer to avoid a violation of fiduciary duty? A. 15 days. B. 60 days. C. 45 days. D. 30 days. The correct answer is D. The correct answer is 30 days because Vermont insurance regulations require agents to remit collected premiums to the insurer within 30 days to uphold fiduciary responsibilities. Reason A is not correct. A 15-day period is too short and is not specified in Vermont's fiduciary remittance requirements. Reason B is not correct. A 60-day period is well beyond the statutory requirement and would violate fiduciary duty. Reason C is not correct. A 45-day period exceeds the statutory deadline and is not the correct time frame under Vermont regulations. Question 6. According to Vermont Statute 18 VSA Section 1033, within how many business days must an insurer acknowledge receipt of a first-party claim? A. 5 business days. B. 10 business days. C. 15 business days. D. 15 calendar days. The correct answer is B. Vermont Statute 18 VSA Section 1033, subsection A, paragraph 1 mandates that insurers must acknowledge receipt of a first-party claim within 10 business days of receiving notice, ensuring prompt communication. Reason A is not correct. Acknowledging within 5 business days is shorter than the statutory requirement of 10 business days. Reason C is not correct. Allowing 15 business days exceeds the maximum period the statute permits. Reason D is not correct. Using calendar days lengthens the period beyond the 10 business days required by statute. Question 7. An insurer receives a proof of loss statement on July 15th showing a $1,200 property loss. The insurer denies $700 as excluded, but agrees that a $500 amount is undisputed. Under Vermont law, by what date must the insurer pay the undisputed $500? A. By August 14th. B. By August 15th. C. By August 13th. D. By August 30th. The correct answer is A. The insurer must pay undisputed portions of a claim within 30 days of receiving proof of loss. Counting 30 calendar days from July 15th yields an August 14th deadline. Reason B is not correct. This date reflects 31 days instead of the required 30-day payment period. Reason C is not correct. This date reflects only 29 days instead of the required 30-day payment period. Reason D is not correct. This date is well beyond the 30-day requirement and therefore incorrect. Question 8. Which of the following best describes how the law of large numbers enhances an insurer's ability to underwrite policies? A. It enables pooling of uncorrelated risks to eliminate potential variability in outcomes. B. It allows prediction of individual policy losses with certainty as the number of exposures increases. C. It improves accuracy of loss frequency estimates by aggregating a large number of similar exposures. D. It reduces the severity of insured losses by distributing them among policyholders. The correct answer is C. The law of large numbers states that as the number of similar exposure units increases, actual loss experience converges to expected loss, improving frequency estimation accuracy. Reason A is not correct. Complete elimination of variability overstates what pooling achieves under the law. Reason B is not correct. The law does not offer certainty for individual losses, only convergence in aggregate data. Reason D is not correct. The law affects predictability of loss frequency, not reduction in loss severity. Question 9. In property insurance, which criterion defines a valid insurable interest at the time of loss? A. A legal claim to share in another party's liability. B. A demonstrable financial stake in the preservation of the insured property. C. A contractual obligation to repair or replace damaged property. D. A possessory right to occupy property regardless of legal title. The correct answer is B. Insurable interest requires that the policyholder would suffer a financial loss if the insured property is damaged or destroyed at the time of loss. Reason A is not correct. Sharing liability pertains to liability insurance, not property insurable interest. Reason C is not correct. A repair obligation does not establish a financial stake in ownership. Reason D is not correct. Possession without title may not create a financial loss interest. Question 10. Which of the following risk management methods involves retaining potential financial consequences without transferring them? A. Risk reduction. B. Risk avoidance. C. Risk retention. D. Risk transfer. The correct answer is C. Risk retention means an organization or individual chooses to bear the financial impact of a loss internally rather than transfer or avoid the risk. Reason A is not correct. Risk reduction mitigates loss severity but does not retain it fully. Reason B is not correct. Risk avoidance eliminates exposure rather than retaining cost. Reason D is not correct. Risk transfer shifts financial consequences to another party. Question 11. Which characteristic distinguishes pure risk from speculative risk? A. Possibility of loss, gain, or no change. B. Potential for loss only or no loss. C. Risk sharing among multiple parties. D. Uncertainty and exposure measurement. The correct answer is B. Pure risk involves only the chance of loss or no loss, whereas speculative risk includes the possibilities of loss, gain, or no change. Reason A is not correct. Describe speculative risk by including potential gain. Reason C is not correct. Risk sharing is a risk financing technique, not a risk type distinction. Reason D is not correct. Measurement uncertainty can apply to both risk types. Question 12. Adverse selection most directly impacts an insurer's underwriting by causing which of the following? A. Elimination of moral hazard among insureds. B. Reduced loss frequency due to premium increases. C. Unintended pooling of uncorrelated risks. D. A disproportionate enrollment of higher risk applicants. The correct answer is D. Adverse selection occurs when individuals with higher than average risk seek coverage disproportionately, raising the insurer's loss ratio. Reason A is not correct. Moral hazard involves post-coverage behavior, not applicant selection. Reason B is not correct. Premium increases may deter some applicants but do not describe adverse selection itself. Reason C is not correct. Pooling uncorrelated risk is a diversification goal, unrelated to adverse selection. Question 13. Which statement correctly contrasts facultative reinsurance with treaty reinsurance? A. Facultative reinsurance automatically accepts all risks ceded by the insurer, whereas treaty reinsurance requires separate underwriting for each risk. B. Facultative reinsurance covers individual risks on a case-by-case basis, whereas treaty reinsurance covers an entire class of business under a standing agreement. C. Facultative reinsurance applies only to proportional agreements, whereas treaty reinsurance applies only to non-proportional agreements. D. Facultative reinsurance is ceded by the reinsurer, whereas treaty reinsurance is ceded by the insurer. The correct answer is B. Facultative reinsurance entails underwriting individual risks separately, while treaty reinsurance automatically covers all risks within a specified portfolio under a pre-agreed contract. Reason A is not correct. Retroactively underwrites facultative risks, not treaty. Statement reverses underwriting requirements. Reason C is not correct. Both facultative and treaty can be proportional or non-proportional. This distinction is incorrect. Reason D is not correct. Cession direction is from insurer to reinsurer in both arrangements. Question 14. A homeowner files a claim after hail dents the siding. The insurer calculates the payout so the homeowner can repair the siding to its pre-loss state without profit. Which insurance principle is being applied? A. Principle of indemnity. B. Principle of restoration. C. Principle of subrogation. D. Principle of insurable interest. The correct answer is A. This option is correct because the principle of indemnity ensures the insured is restored to the pre-loss financial position without gaining from a covered loss. Reason B is not correct. Restoration is not a recognized core insurance principle and lacks legal basis in policy language. Reason C is not correct. Subrogation refers to the insurer's right to recover from a third party, not the restoration of the insured's position. Reason D is not correct. Insurable interest requires a financial stake in the property, but does not govern the extent of recovery. Question 15. An applicant conceals a prior insurer settlement on the application for property coverage. This concealment violates which contract doctrine requiring complete honesty between insurer and insured? A. Doctrine of adhesion. B. Doctrine of indemnity. C. Doctrine of utmost good faith. D. Doctrine of reasonable expectations. The correct answer is C. This option is correct because the doctrine of utmost good faith mandates full disclosure of all material facts by both parties. Reason A is not correct. Adhesion describes a take-it-or-leave-it contract form, not the duty of full disclosure. Reason B is not correct. Indemnity governs financial restoration after loss rather than honesty in disclosures. Reason D is not correct. Reasonable expectations protects against unexpected policy terms but does not impose a disclosure duty. Question 16. A 16-year-old obtains a dwelling fire policy in Vermont and later seeks to void the contract due to age. Which insurance contract requirement addresses this issue? A. Requirement of legal capacity. B. Requirement of insurable interest. C. Requirement of mutual assent. D. Requirement of legal purpose. The correct answer is A. This option is correct because the requirement of legal capacity ensures parties are legally able to enter into a binding contract. Reason B is not correct. Insurable interest concerns financial stake in the property, not the ability to enter a contract. Reason C is not correct. Mutual assent addresses agreement between parties but not their legal competence. Reason D is not correct. Legal purpose requires lawful object matter, not the party's age or capacity. Question 17. Which element is required on the declarations page of an insurance policy? A. Coinsurance clause. B. Vehicle identification number. C. Appraisal condition. D. Policy period dates. The correct answer is D. The declarations page must show the policy period dates, effective and expiration, along with insured and coverage details. Reason A is not correct. A coinsurance clause appears elsewhere in the policy, not on the declarations page. Reason B is not correct. Vehicle identification numbers apply only to auto endorsements, not all policies declarations. Reason C is not correct. Appraisal conditions are found in the conditions section, not on the declarations page. Question 18. The portion of the insuring agreement that establishes the insurer's obligation to pay for covered losses is known as the A. Definition section, B. Exclusion section, C. Conditions section, D. Insuring clause. The correct answer is D. The insuring clause specifically states the insurer's promise to pay for covered losses under the policy. Reason A is not correct. Definitions clarify terms, not the insurer's payment commitment. Reason B is not correct. Exclusions define perils not covered, not the promise to pay. Reason C is not correct. Conditions outline duties and obligations, not the payment promise. Question 19. Under the conditions section of a property insurance policy, which duty must be fulfilled by the insured after a loss? A. Abandoning damaged property. B. Exam under oath. C. Initiating appraisal procedure. D. Providing sworn proof of loss. The correct answer is D. The conditions section requires the insured to furnish a sworn proof of loss within the specified period after a loss occurs. Reason A is not correct. Abandoning property is not a duty. The insurer may salvage damaged items. Reason B is not correct. An examination under oath is optional and only upon insurer's request. Reason C is not correct. Appraisal is for dispute resolution and not an immediate duty after loss. Question 20. A primary purpose of the definitions section in an insurance policy is to A. Provide a list of specific perils. B. Outline insured duties after loss. C. Ensure consistent meaning of key terms. D. Detail the dispute resolution process. The correct answer is C. The definitions section clarifies and standardizes the meaning of important contract terms used throughout the policy. Reason A is not correct. Listing specific perils is done in the coverage or insuring agreement sections. Reason B is not correct. Duties after loss are specified in the conditions section, not definitions. Reason D is not correct. Dispute resolution mechanisms are found in condition or endorsement sections. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.